Hello, everyone.
Hi!
Aren't you glad summer is finally here? And some of our clients have certainly had some good questions over the past few weeks, and that's why we thought we'd cover a few of those today. Sandy, what's something that are on our clients' minds?
Yeah, David, when the pandemic first hit in the U.S., the stock market certainly took a nosedive. But since April, it seems like it's almost back to normal. Does that mean we're through the worst part of this, at least financially?
Well, maybe. Hopefully, I guess I should also say. But we did experience quite a quick downturn. As you probably recall, we saw about a 33% drop in stocks, and it was probably the quickest one in history, and it happened all in that very short period of time at the beginning of the year. But then we also found that the markets did bounce back rather quickly. So in the past 2 months, April and May, we saw one of the largest, quicker returns also in history. And this, I think, was also probably fueled by the stimulus that our government laid out over the past few weeks, and their quick action and we'll do pretty much anything we need to do approach got investors awfully excited and gave them the confidence that, okay, we don't have anything to worry about. Well, as you probably know, the earthquakes are not always the biggest problem that we have to deal with. It's the fires that come there after the earthquake, or I'm from Florida, so hurricanes, the floods is what comes. So we had this virus that came that kind of set our economy, our economic engines kind of coming to a halt. That is going to take some time for the markets to heal from or to get started once again. So, we probably will see a really bumpy next few months or quite a few months maybe. But then again, we've never seen stimulus like this before too. So our economy, we might not see the lows that we saw in March, but then again, we've never seen this many unemployment people all at once also. So there's a lot of uncertainty, but I do want to remind you that, we have taken some good steps to help reassure that our portfolios are in good shape. The money managers that we do hire, they do actively look for opportunities in the markets. And that, once again, we think, will provide some more certainty to, our investors in your portfolios.
Okay, you mentioned that there's still some uncertainty in the markets. With us having so many clients that are near retirement or currently in retirement, how do you think that's going to affect them?
Yeah, certainly any changes will require some reevaluation of your retirement plan. But I'll point right off the bat that, when we put together the retirement analysis for a lot of clients, we assume inflation rates of somewhere around 3.5% inflation. As you probably can imagine, right now we're not going to experience inflation to some degree. So right there, if we're expecting to see inflation around 1% or maybe even less, that's going to dramatically impact the draws on your portfolio or the need for drawing from your portfolio. So that's number one, and that does make a huge impact on your plan because, as you know, a lot of our projections we use a 5% rate of return. So, and if we're expecting 3.5 as inflation, but now we're expecting something like 1, that's a dramatic change to your plan. So yes, I would say that's one thing that you won't have to worry about as much because Vanguard just sent something out today that says that for the next 10 years they do expect inflation to be lower than prior expected. But also I'll remind you again that portfolios, we did build up some cash in the portfolios, especially those that are taking extra withdrawals to live on, to give you that certainty that you're not going to have to sell at a bad time of the market. But then again, you got to remember, if you're buying something like a stock that is in Home Depot or a bond that that people are paying you a regular income or paying those payments to you, you'll receive those income streams or dividends and that will help support your need for income down the road.
Well, that sounds very reassuring. But I do have one more question that seems to be on everybody's mind these days, and that is, how do you think the election's going to affect
Oh
the
yes,
recovery?
of course. We get this feeling every 4 years or so, and it's the same answer each time. We really do not care of who is in Washington, and that's leaving politics out of it. But that just means, if you think about it, there's winner and losers in every election year. And so if I'm a money manager, my job is to help you to find those areas that will perform well under whatever platform we're on. And so, and that's just investing in general anyways. Sure, there's going to be some areas that get beat up pretty bad if one side wins versus the other. But again, those are shifts that companies have to make quite often anyways. So I would just keep in mind that, America is very innovative, and there's always will find a way through. And so even if we have one of the best or worst president, companies will thrive either way. They just have to figure out what they're going up against. And I point this out every few years, is when we do have gridlock in Washington, that's a good recipe for the markets to do fine. That means they don't have to worry about new laws or things that will impact them. That just gives them more certainty that things, we can put things back to work as a company. So don't worry so much about the election. Sure, I wish it wasn't happening this year because we have a lot of things going on, but again, companies will find a way, and I'll just reassure you that money managers, that what their job is to go to work every day and find values in the market. And there's always values, there's always buyers and sellers, and the day will go on and they'll find new opportunities. Thank you. We'll talk to y'all soon.